Okay. And then also in here, you're going to learn, in the course, the super simple self-storage course, you're going to learn, right? Total population divided by total square footage. Okay. Total population divided by total square footage. Okay. So, equals 6 to 8, right? Per capita. This is per capita, okay? So, like when you find a facility in the storage investing world, competition is like super duper 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 important, okay? So we don't run comps like on residential. You don't look at like what other storage facilities sold for. You look at income, right? Then you look at the competition, right? What is it making right now and what it could be making, right? That's basically it. It's like on the deal analyzer, when you get it and when you're looking at it, that is why we have as is versus potential versus opportunity, right? As is versus opportunity is really what you're looking at. So as is right now, what's the income? And based on what the competition is selling for, this is what we could be doing. And so like now a lot of like REITs or bigger companies, they're going to be like, okay, what's the cash flow? A lot of REITs, they really focus on cash flow. How much money am I going to make on a regular basis? Because when you borrow that money from a fund, when you get that money from a fund, you got to be paying it and stuff like this, so essentially. But on the opportunity side, looking at the competition is really going to help you to determine what the fair market value for your price per square foot is. All right, what's the fair market value of your price per square foot? And you should be at that. There's no reason for you to be below. I mean, I just had one student, she bought a $3 million facility and she's like, should I just like tear the Band-Aid off and just go for it? Or should I do incremental adjustments? And I was like, just tear the Band-Aid off. There's no reason for you to be any cheaper than anybody else. In fact, you are going to be higher than everybody else. That's your goal, right? So, right. So that's what you need to look at. And so when you start finding facilities, based on as is versus competition versus opportunity based on the competition, then essentially what you're going to do is say, okay, I think I can buy it at this much and I can increase it to this much. All right. So now the question is it a good area to buy in? Is it a good area to buy in? So essentially in a primary market, you're at like less than a mile, right? You're at a mile or less for the radius of where you should be looking at your competition. All right. So it's less than a mile. Okay. That's a less than sign, hopefully. And then on the secondary less than 3 miles, and tertiary less than 5 miles. And then sometimes in the tertiary, you could go up to 10 miles. Like we just bought a couple here in Florida, and the town has around 10,000 people, but in a 10-mile radius, there's 25,000 people, right? So, so you can look like in tertiary, you can go bigger radiuses, but essentially like in that radius of where that facility is that you want to buy, essentially you're going to look at now the total population of that number in that radius divided by the total square footage. How do you find the total square footage? Well, you're either have to manually do it, or you're going to have to figure it out by doing some research and using certain kinds of software or whatever to find total square footage. All right. But essentially that is what you need to do. And if the number is between 6 and 8, right, then it's a thumbs up. All right. And if it's below or above, it's a thumbs down. Okay. And so that's what you need to do. All right. So primary is, and Eric says primary, secondary, and tertiary markets is like when you are driving and you are seeing big box companies, you are in a primary market. Okay, when you drive out, it's like big box like U-Haul and extra state space storage and all this kind of like, whatever, life storage or whatever these big ones are, CubeSmart, then that means you're in a primary market. Now, they are starting to get into secondary markets. I've noticed that they're moving into secondary markets, these big box companies. So you could possibly be into a secondary market, but you won't see a lot of them in a lot of areas. But in the secondary markets, you see big box, like big storage facilities, but they have like a different name, like, like us, like Canton self-storage or something like this. Like it's like a different type of, like it's a big facility, but has like a different name to it, right? But it looks like a brand new, nice big facility. Okay. And so then when you get into tertiary markets, then you're like, you can find any of that. There's gonna be like Butch's storage is what there is gonna be, right? It's gonna be like everything that we've ever bought is always like Butch's storage, or let's see which one we buy. Rainbow, we're buying one Rainbow storage right now. We bought a lot of Rainbow. We got 2 Rainbow storages. That's like a Rainbow storage. Anyways, so but like, or AAA storage, like you'll get a lot of like AAA storages or like ANA storage, that kind of stuff. So that's like really kind of like the secondary to the tertiary. So it's like primary to secondary, and then there's secondary, and there's secondary to tertiary, and then there's like tertiary to tertiary. Okay. That makes sense. Hopefully that makes sense. Okay. Acquisitions. So I go over all of this in the course under the acquisitions department. So for super simple self-storage, all my students, you guys can get in there and y'all can watch that immediately. And hopefully non-students in the meantime, while the doors are not open for storage nerds, I recommend that you buy my course and go through it. All right. The doors are not going to open until next year. Okay. Until 2022. Okay, not until not late, like in end of January, maybe February of 2022. Okay. All right.